I think it's different if you're talking about the acquisition model, where businesses are changing hands. There needs to be a new model because there is very little at the moment. You've got to believe something will come out. But I mean, one thing we are seeing, you're constantly trying to see a trend, aren't you, in the little anecdotes you see. But I think there's definitely been an expansion in rich private individual funded funds who are looking for opportunities, particularly in the small business sector.
I think that the lower end of small and medium-sized enterprises are, the prospects look rather better for them, because I think there is more money going in through business angels, through angel networks. There are these new European funds coming through, these so-called Jeremy funds through regional development agencies.
Picking up on Lee's point in business link, I don't know whether it would make sense to have those people based in the branches or the business centres. It would help. It's guidance, isn't it? You get to 5 million turnover, we make these numbers up, and you've got so much sophistication. Then you get 25 million and so on, and every type of business are getting better and more sophisticated with the requirements. I think maybe that's where banks need to look outside as well.
I suppose it's a fairly revolutionary suggestion to take Business Link and put them in with the people that can provide the funding, but I suppose it makes absolute sense in that there is a disconnect between Business Link, which tend to have a public sector feel to them, and them working with companies to actually get things done.
I can't imagine it would work, quite honestly. I think you've got to look at the way the funds are given out and try and get some consistency, perhaps even centralisation.
There's a lack of coordination. You only got to look how many different public sector bodies or quangos there are in Yorkshire, and trying to find the right one for you to tick the right boxes is quite difficult. Yeah. It's actually getting over what is available, how do you access it, and what help do you get to access it.
So we're all agreed that you are all in the risk business. How are businesses going to fund growth?
In the run-up to the recession, the banks had turned themselves into massive selling machines, and you were all bombarding us. I mean, I was getting cold calls all the time. Do you want to change your banking? And you were doing that through relatively low qualified people. The people we had on the phone did not know a lot about banking.
Duncan's absolutely right, and even to a degree sometimes in our world, the skill set of people who come and talk to us is just dreadful. I question that do banks really want to lend to property, because actually when you do find one that's going to lend, and one thing that hasn't even come up on the agenda here today is what the price of this thing is, because the price is just so unpredictable. So you look in the newspaper and you see what base rate is, or LIBOR, or anything else that you might try and find as a yardstick, and you've just got no idea what the margin is that's going to follow, and then the fees that follow that. It's obscene. The actions speak much louder than the words, and when the banks can be predictable in terms of the fees that they're going to charge, and the margins that they're going to charge, that's the point at which we entrepreneurs, for want of a better expression, are going to have the confidence to go and grow our businesses, because we will really know then that the banks are behind us, because at the moment sometimes they are and sometimes they're not.
At the same time, we need to keep more capital aside so we don't get a repeat of what happened a couple of years ago. So price is a big issue, and a motive which I accept. We've got to find the right balance between getting a return and being fair to our clients.
I think the point you make is very fair, and there will be incidences because all banks and the number of people that they employ, there will be highly qualified individuals and those that could probably do with more than a gentle refresher. What we've done with customers is being very honest and very open, and sometimes those conversations are extremely difficult on both sides. Good or bad news, it can be a good company, and you're having to say, frankly, Edward, we need to increase the fees, or we need to increase the interest rate. But what we've done is we've taken the yield curve with us and said, look, forget what it says in the FT about base rate, because that's not how big businesses fund themselves. This is how we fund turn debt.
For me, the single biggest thing looking forward is the issue of predictability, so that you don't get that right.
It's the same issue in different ways.
And you just need, and property is a long term, so I'm sorry to dominate this part of the conversation, but property is a long-term play. It's not a short-term play, and you get ups and downs. You get administrations, your income rises, your income falls, but it's a long-term play, and unless we know, and we do, as I said on a number of occasions, we do know that our lines of finance are with us. But if you don't know that, and you're not as fortunate as we've been, it must be just a complete nightmare.
Given that we're entering a period where interest rates can only go one way, is that going to put even more pressure on companies going forward?
Well, those forward exchange contracts, people, that we have and Lee has, have been working extremely hard to ensure that people are advised about what's going on. Now, you know, it's a bit like having a fixed rate mortgage. I'll take it back to basics. Having a fixed rate mortgage, you lock in. You don't lock in because it's absolutely the best rate. It's a rate at which you can afford to pay it every month, every quarter. That's what that is all about. It's about taking some of the unpredictability out of the equation. We've just got to be clear with people what it is we want. So if we want, you know, interest cover at 130%, it's very clear that we get involved with people who know that they've got to put 30% of their equity into this, and this is what they'll be expected to do. So please don't come along with a list of tertiary tenants expecting to pay prime residential, commercial rents.
Heavily criticised 2 or 3 years ago for not doing some of the deals in the property sector, which were done by some of the peripheral banks who are either no longer around or no longer lending. So it's making sure we're clear to clients what our parameters are and what we expect. And the property market is now come back to that sort of way.
Maybe it's about scale as well. I think we as banks have got smarter at knowing how to assist these businesses. You know, we've had a number of businesses where the trading has just not been where it should have been based on their forecasts. They're the experts. You know, we can have all the sector knowledge in the world, but I can come onto one of your sites or into your business and tell you more about your business than you do. But what I can do is I can listen to what you've got to say, and to all the metrics that we base throughout the whole of the bank and the specific sectors, say where you are and try to support.
I think we actually agree on this, and Edward summed it up. What we want is predictability. We want to know that Lloyds will lend on this kind of transaction and at this, not exactly the rates, you know, there's got to be competition, but we just need to know broadly what you do.
Yeah.
We've no idea. As far as we're concerned, the banks are not lending anything, so we're searching around to find out what you are doing.